Okay, people, today we have to talk about the elephant in the room. And by elephant in the room, I mean the biggest company in the S&P 500, which of course everyone knows, Apple. Great products, love them since my first iPhone was iPhone 4, I think. I was still a young kid almost at that point. And actually, I have quite a history with Apple. It was the first individual company that I bought, which was back in 2000, late 2017 or early 2018. And basically, I did very well with the stock, to be honest. And I will show you some charts later, how was my own history with the Apple a little bit more in detail. But when I was buying, it was a different time, right? So let's move fast forward to where we are at the moment, right? And is Apple actually still kind of like a reasonable company to buy? Or is there something that we should be a little bit worried about? And, spoiler alert, in my mind, it's a little bit more of the latter. So let's dive a little bit into what's happening at the moment and what we can expect. Because first and foremost, Apple had a great run this year. I think if I remember correctly, something around 40%, 42% year-to-date returns. So, obviously spectacular. That being said, Jesus, the trees don't really grow into the sky, are they? So basically, let's, for example, check, and actually one more thing that I want to a little bit show, because there is a big Apple event, right? Obviously, every September, there is big unveiling of the new products, which is happening tomorrow. And we should expect the biggest change to the phone's design in 11 years. So I don't know about you, but I call BS on this statement here. So, what's going to happen to iPhone to blow our minds? Is it going to be a little bit thinner, 1 gram, lighter? Okay, it's going to probably have USB-C, which, okay, is that innovation? So I don't know about you guys. I'm definitely not buying a new iPhone this year. I might wait, another 2-3 before my, the existing one becomes a little bit more obsolete. But that's how I like to do things. And that kind of brings us to obviously the company itself, right? And the operations, evaluate the business. So of course, the big unknown is the profitability moving forward, right? As you can see, analysts are expecting to actually shrink profitability a little bit next year. So Apple just became such a huge company with basically at that point of like a full maturity, obviously cash cow producing like amazing, staggering cash flow. And it also has that operational excellence, I would say, right? Obviously, since a long time ago when Steve Jobs died and handed the reins over to Tim Cook, they've obviously did, amazingly, right? Let's look at the latest income statement, right? So if you want to invest in Apple, you have to understand that you are mostly still relying on iPhones, right? Which form over 50% of the overall revenues, with some smaller parts coming from the MacBooks, iPads, AirPods, and then obviously services, which is a nicely growing segment with very high margin, which is a little bit of like a bullish thesis for the most people, right? That obviously the iPhones might stay flat at this point almost, but as long as the services grows with the high margin, that means the profit profit is still going to pour in. That being said, the company and it's a little bit priced to perfection in my mind, right? At this point, like everyone is invested in Apple either directly or indirectly, right? Apple is such a huge company, and one of the reasons why they did so well, especially over the past, I would say those past years, basically since I held the company, one of the great basically tailwinds was reducing the shares outstanding, right? The company with all of that free cash flow was buying back shares, left and right, basically, really eliminating a significant portion of the overall float. So, from 28 billion shares to somewhere around 16 at this point, which at the same time, a little bit reduced their cash pile. The debt is kind of at the same level. So, this is what happened basically over the past 5 years, right? So their balance sheet, thanks to all of the buybacks, got a little bit worse. Cash flow obviously still exploded. Net income is still doing great. So again, operationally, everything's fine. But we have to understand not just the company, but also the financial aspects, right? And the little bit intermezzo, right? Because it's also about what's ahead for the company, right? The Vision Pro was introduced recently, and it's, like, it's again this like pie in the sky that sometimes in the future might happen. A couple of years from now, let's see when it's actually or officially released, when people get their hands on it. So we cannot expect anything meaningful from this at the moment. And once again, right, Apple, the biggest company in S&P 500. So 7% of the weight. It's like a whole market relies on Apple holding it up. And if there is something that happens with Apple, oh god, I don't want to see that. Like, that's going to be a mayhem, right? Because again, like, basically everyone is directly or indirectly invested, unless you are really picking individual companies. But majority of the people have at least their 401ks or different retirement accounts in S&P 500 usually. So of course, whatever happens to Apple influences the whole market with a lot. And there's also what I would consider kind of like the Warren Buffett dilemma, right? Because he made a great choice when he bought Apple originally, right? And it also swelled to the biggest portion of his portfolio by a wide margin. So this is a public portion of the portfolio of the Berkshire Hathaway, right? Warren Buffett's holding company. And 51% at this point is Apple. He is freaking locked in this position at the moment. Because, like, if Warren Buffett was to sell even a portion of the company, everyone would got super spooked. Okay, Warren Buffett no longer believes in the company, or what's going on. So, like, of course, 51% portfolio in one stock. Jesus, the guy has... that's insane, right? But of course, that means, like, he cannot really get out of this position, right? And of course, Berkshire Hathaway is also a big portion of the S&P 500, right? So all of these companies are really intertwined together, own portion of each other. So, oh boy, mamma mia, not good. And that brings me to probably the most important lesson of this video, right? So let me kind of pull out the trading view and show you my history with Apple, right? And what also makes it super important for you as an individual investor to understand, right? Obviously, the company, the financials, operation, that's the primary, that's the alpha and omega. But you also have to understand the financials, right? So my history with Apple was I was buying somewhere here between beginning of the 2018 and buying, significantly for over a year and a half until, the mid 19. So here I was buying, nibbling shares, every month, every 2 weeks, good. And then I basically held since then, right? And between the time I, stopped buying and I sold back in approx at the beginning of 21, the stock doubled. How come? Well, one of the most important reasons was that all of the multiples expanded by quite a wide margin. When I was buying, Apple had P ratio, price to earnings, which is kind of the approximation. How much are you paying for the company for each small share of their profits? The P ratio was somewhere between, 18, 14, 13, kind of really low range, right? So that was very clear indication that the company is undervalued. P ratio, definitely a good proxy for mature companies that are profitable. And since I stopped buying and I sold, the P ratio expanded to almost 40, kind of 36, 38. That was here at the very peak, right? So, kind of the long-term trend or kind of like the median of Apple P ratio would be somewhere maybe 25, right? So what would justify the move to a higher P ratio? Yeah, probably the services to some extent. But then again, that means that if you are buying Apple at this point, you are also buying for these high price to earnings, price to sales ratio. So if you're buying Apple at this point, you are betting that everything is going to go just right. Just right. And, just imagine that the market decides to a little bit re-rate the Apple, right? There are obviously a lot of risks, something with, China can always happen. And simply, the sales might a little bit decline here and there, right? Maybe the profits will be a little bit lumpy. It might happen, there will be a weak year or two. And maybe Apple no longer, deserves that 29 P ratio it has now. Maybe this deserves only 20, 25. Okay, that would mean that Apple would go back somewhere to 120 just by that multiple compression, right? Nothing else. So if you were buying Apple here, okay, you had plenty of kind of the optionality for the stock price to appreciate, right? Where really I would argue that I was mainly benefiting from that multiple expansion. Obviously the company was getting better over time, but at a relatively steady manner, right? The most of this relatively, steep rise in the Apple stock price was thanks to the multiple expansion. So, whenever you are buying a company, be careful about the valuation. They always matter. If you're buying Apple now, you will probably do fine, but I would argue, is it really a company that's going to outperform the market overall going forward? And if so, I would probably say it's not going to be by a wide margin. So what I prefer to do is to buy companies that have a little bit more going for them, right? And a little bit more brighter future, like significantly brighter, right? Significantly more revenue, more profits, a little bit more further down in the future, right? Not looking for companies that will just, trade in the range, because let's say, if I would just held the stock since, 21 until now, I would have made probably another, 30-40% on the stock. But then again, that's for the 2 years of holding. That's, what did the market do at the same period? Kind of the same, right? So hope you learned something here. I know I got a little bit technical towards the end, but hope it helps you. And a little bit, just be careful about the valuation. It really can make or break your investment. So thanks for staying with me. Subscribe, all of these stuff. I don't know. I'm still figuring out how does this all work. So much appreciate spending the time with me, and talk soon.